All right, good morning, everyone. It is 8:44 on the morning of December 15th, 2022, and this is my pre-market strategy session. So, um, what I'm looking at here is the Qs, and what I'm seeing here, a bunch of yellow lines, a blue vertical line, some red horizontal lines here, and so let's kind of go through it real quick. Now, let's see, from Monday the 12th to December the 13th, there was this gap between 285.64 and where it opened the next day at 288.65. Or I'm sorry, actually, it didn't open up there. It opened up all the way at 293, 296.55, or 65. Good golly, I forgot about that. And it spent pretty much the entire day drifting down until it came and closed the gap. Now there are a few cents there in between the previous day's close and the low of the next day, but it's pretty much closed. I mean, if it comes within a tiny percentage of hitting the gap and then turns around, then it's filled. But so it was I don't want to call it a gap and crap necessarily because it gapped up, came down, filled the gap, and then started heading back up again. All right, and so then yesterday there's the FOMC with announcement with Jay Powell. He got up and said his thing, and basically what he's saying is that the Fed is getting, as he expects to do more rate hikes until CPI, until inflation comes down below the Fed funds rate, and it's kind of like that's what he's been saying the whole time, and certainly there's a 50 basis point rate hike baked in. I think people were getting really excited that he was going to say something like, we're going to go to 25 basis points from now on, or maybe we can stop raising rates. We can skip a month or something. I don't know. But certainly at the open on the 13th, after CPI reading, and then, yesterday we had the FOMC minutes. Yeah, it's been a pretty eventful week. Well, so what's going to happen? Here again, here I am. We're if the market opened up right now, it would open up at just above this gap right here. Actually, I'm sorry, not above the gap. It's not at the top of the gap. Here's the top of the gap. If it opened up right now, it would open up above the support zone. I should rename the title. So there's this roughly 280, and it seems to come back to kind of this price area from, let's see, September. It went below, tested it again in early October and failed. Tested it again in late October and failed, this 280 area. And here we go, we popped up above it. This roughly this 280 area right here. And actually, let me move this out of the way. I'm going to get rid of those two right there. Get rid of those and clean this up a bit. And I'm going to put a line in right there. It's 281 roughly. And so, here back here, it fell below, tested, failed, tested again, failed. I actually tested a couple more times, failed really hard, and then came blasting up through it. And so, on its face, that's bullish, but it's too hard to call. We should have a Christmas rally coming up, and what I'd like to see happen, although it would be quite drastic right now, if it did it right now, it would be a little bit unusual. It would be just come down and fill this gap, the gap that was put in between November 9th and November 10th. Could happen. I'd like to see it get support here and then take off for the upside, although time is kind of running out for that kind of a move right now. So, bearish is the correct direction to be in. Don't fight the Fed, right? I mean, if the Fed is dropping rates, you go long. If the Fed is raising rates, you go short. And it's just the way it is, So The 19th is the week leading up to. The reason I have the 19th marked off is it's the week leading up to Christmas, and I mean I imagine that we're going to see a Christmas rally happening at starting from the 19th. But we'll see. It could be a different Christmas this year. It's usually the last week of before Christmas there's a Christmas rally. So yeah, gapping. Well, yeah, I mean, kind of gapping down. We're in this price zone right here as of right now. I mean, it's going to open up 1.75% lower than its previous close. So that puts a test of 276 on the board if it opens up below this roughly 282 level, and 276 is on the board today for a test of support. So yeah, we'll see what happens. Let's see what's going on in the pre-market here. Let's see if we're overbought or oversold. So we're definitely oversold on the 10-minute, oversold on the 1 minute, and on the VIX. Overbought on the 1 minute and close to overbought on the 10-minute. So there's it looks like there's going to be a morning. It looks to me like there's going to be a morning sell-off. The first hour will be selling off. 10-year, 2-year, very interesting. So this 699 was the previous record set according to the history available on my charting software, which was in InvestView, TradingView. Back here in 2000 was the all-time low, or the low since this data, as far back as data goes on this chart. The low on the 2-year, 10-year inversion is 699, negative 699. Now we came back and we made a new record of 899, and here we are this morning, kind of testing that 699 level. Let's go to the daily. And so it tested that historic level there, and I imagine that it's just going to roll over, and people are going to still do a flight safety. So there are people that are going to keep piling into the 10-year and driving that yield down, and not getting into the 2-year so much, and so that yield, there isn't as much demand for the 2-year, and so the 2-year yield, doesn't go down as much. So yeah, I imagine that we're probably going to see a retest of 899, sooner rather than later. And this is just, I have a firm up, because, and it's funny, I still have that mark. You can see this back here. I really lucked out on this one. I started buying back here at some point when I think it was closer to 110 than 105. But at the time, I was like, I see, for whatever reason, I was like, I see this thing's bullish. I have this circled. I don't remember why I circled this right here. But I bought options on this, and quite a few options out of the money. I think I was at 140. Yeah. For like, I don't know, a month or 2 months out. I can't remember. But like the day or within 2 days, I think I bought it like on a red day right here. But really soon after I bought those options, it just took off to the upside, which was really nice. But anyway, here it is. It topped out, and look at that topping. Look at this topping hammer right here. Look at this thing. If that's not a topping, let's take a look at this. This hammer down right here, right at the top of a move. That is a topping candle right there. Well, so anyway, just kind of looking. Let's see. It topped out at 176.65, and here we are. So that was November of 21, and here we are roughly a year later. Let's go from top to bottom. I'll go all the way to the bottom here. That is a 93.95% move to the downside for a firm. You know, terrible, terrible. And revenues are only $361. You know, 300. Let's see, 364, 361. Let's see what it was back here. 269, 361, 261. Well, it's a tech company and it's getting blasted. This is going to be quite common for tech for quite some time. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I'll see you at tomorrow morning's strategy session. I am out.